Okay, so I have thought about the strategies I use. I've mentioned it. Um, I use the trend line, chart pattern, the moving average, and Fibonacci retracement, then candlestick pattern. So I have thought about the trend line, then the moving average. So I want to talk about Fibonacci retracement and how to use it so that you too can also be doing your analysis on your own and be checking out trades on your own. So let me use a practical example that I gave. This is NZD-CHF. Now, if you remember that I gave a signal when the price of NZD-CHF was around 0.51442. Then I gave a signal that when the price comes around this area, we should buy. So now, why did I come to such um conclusion? How did I know that we can have a buying opportunity around that area? Number one, look at this trend line you are seeing. It's a trend line that I have for a very long time, I think from a daily time frame. I had that trend line from a daily time frame, as you can see. And then going to 4 hours candlestick chart pattern, you could see that we had a breakout on that trend line, this breakout here. So immediately I saw that breakout and I see price trading above all the moving averages. Remember that I said the moment price is above all the moving averages, it's an indication that the momentum want to start building to the upside. The momentum is to the upside. And when the price is below all the moving averages, it means price is likely going to the downside. The momentum is towards the downside. So when I saw the price broke the trend line and then price was trading above all the moving averages, the next thing was to look for is a place where we can buy it cheap and then look for 2 to 3% profits. So this is where Fibonacci comes in. So the moment I saw that breakout, then I'm waiting for a pullback. And then to measure. I used my Fibonacci retracement to measure where pullback is likely to be possible. And this was where this was how I came up with that. This was how I came up with that. Now can you see? Look at it. Look at the yellow and the red. Now on the Fibonacci retracement, you have 0, 23%, 38%, 50%, and 60%. Some people use the 23%, but I don't know how to use it. I prefer to use between 38 and 61. So anytime I use my Fibonacci retracement, I mark out that area, 38 and 61. The moment price start dropping in that zone and then gives me a bullish candlestick, a candlestick pattern, and then I can see the moving average in that zone to serve as my support for a bullish direction or resistance for a bearish direction, then I'm having strong indication to pull the trigger to execute the trade. Now, if you want to use your Fibonacci retracement, you won't see it like this. I was the one that customized it this way. You can actually customize it the way you want. So I mark out 38 to 36 so that I can always mark it out. Now, let me say this. Take note that The Fibonacci retracement does not work in a sideway market situation, a sideway market structure. When market is like this, Fibonacci retracement don't work. Also, moving averages don't work. When you see market structure like this, Fibonacci don't work. Moving averages don't work. Fibonacci works in a trend market profile. Fibonacci works in a trending market condition. Then, how do you draw your Fibonacci? You look at the previous low and then the previous high. The previous low and the previous high. Then you mark that area out. This is exactly how I do it. And then I I mark it out by zone, buying zone. So I'm expecting the price to come down to this area and then we can go higher. This is how the Fibonacci works. So now another thing is don't trade the Fibonacci in isolation. Try to combine it with other tools like the trend line and moving average and also candlestick pattern. So I will also be talking about the candlestick pattern because it gives you more strong bias about your analysis. So this is how the Fibonacci works. So in this situation, I'm placing my buy in that area and my stop loss is below the Fibonacci level or below the moving average that is serving as my support. And then my take profit, I'm looking at 2.53%. Like that. Then the same thing in a bearish market profile is the same thing that we are looking out for. The same thing. Now, in a bearish market situation, we are looking for a trend. In a bearish market situation, we are looking for something like this. And then I'm using my Fibonacci retracement from up to down. Then I'm marking out that area. Sell zone. Then I'm waiting for the pullback. Then when I see price around this area, I'm waiting for other things, moving average confirmation, or there's a trend line around that area. Moving average to serve as my resistance, then candlestick formation, and then boom, I'm selling. So I'm targeting my sell, I'm placing my sell around that area. Stop loss below the 61 or 61, 62 Fibonacci or below the moving average, behind the moving average, and then I'm targeting 2 to 3% profit. So this is how to use the Fibonacci. It's a very good tool that helps you to buy low and then to sell high. This is how the Fibonacci works. So exactly that was what we did with NZDCHF yesterday. If you remember that I said, let's watch out for price to come around this area. Look at it, price drop here, and then it's using the 200 moving average as the support. And then boom, one candlestick went straight up. Look at it here. Let's say we make our entry somewhere here, the stop loss somewhere here, and then I'm targeting 2.5%, 3%. Look at it. Boom. So now you may be wondering, why did I do that? I explained earlier because I saw this breakout. So I'm expecting that the price should keep going higher until we get to this rejection zone, this resistance up here. Let me see if I can see something that look like it that we can do. Let me look at gold. Okay, not yet in gold. Let me see if we can see something that look like it that we can do. Nothing here. This is more like an head and shoulder pattern, inverse head and shoulder pattern. I will also talk about head and shoulder pattern in one of the videos I'm going to be making, and how I use the chart pattern. Because when the market is not trending and I have to trade, I'm looking at chart pattern. I use chart pattern to make my decision. Or when there is a reversal of trend, I use chart pattern to also make the decision. Okay, so I'm not really seeing any trade for now. So you can just start practicing. This thing takes time, but with practice, you can always get it right. You can always get it right. So you have to make sure there is a trend. There have to be a trend before you use the Fibonacci retracement. Let's even look at some of the trend that has happened. Okay, look at this. Look at this. Look at what happened here. See, let's see if Fibonacci works perfectly here. Look at it here. Look at it. The Fibonacci started responding from the 61%. And then from this area, you are picking your sell here. Do you realize that the Fibonacci, I used the Fibonacci here yesterday for my USD card. I traded USD card. So look at the Fibonacci, my entry, and then my exit was behind that candlestick, my entry, and then I targeted this 2%. But the market actually did more than 2%. It kept going down. You can see here, see the buying, the selling opportunity. Look at the selling zone. Sell zone. Let me remove the Fibonacci. Now, can you see? It got there, then it pulled back here. Boom, I entered. I picked my sell here. USD card. I think I shared the result in one of the communities. Look at stop loss behind here, and then look at take profits. That's how the Fibonacci, we use the Fibonacci. Let me see if I can still see one more. Let me see if I can see one more how the Fibonacci works. Now this is a selling trend as well. Okay, look at here. See Fibonacci from this high, lower high to this lower low. Look at it here. You can see it here. Sell sell zone. I'm already used to it, so I write it out. I'm used to it. Can you see sell zone? And the price got there price got there, it did a little bit of consolidation around that area, and now it's going down. So look at the moving average as resistance. So to sell in that area, you can sell in any of those areas, putting your stop loss. You can sell in any of this area, putting your stop loss behind the moving average, and then we are expecting this price to come here. Bam! And it's currently responding. So this is how we use Fibonacci retracement. Now remember that you need to practice this for some time to be able to master it. Remember also that Fibonacci retracement does not work when the market is not trending. When the market is flat, it doesn't work. Same as the moving average. When the market is not trending, it does not work. So I think watch the video and then start practicing how to use the